Morning everyone and welcome to the advanced chart pattern class. Today we're going to be taking a look at a couple of trades that we set up yesterday, both in this class and in the late night class. So hopefully you guys have been able to take those, and well, then we're going to be going through anything you guys want me to. Remember, the advanced class is not meant to be, it is meant to be beginner friendly. The purpose is for you guys to ask any questions and I'll dissect one or two topics as much as I can from zero to hero so you can fully understand those topics. So ask away, don't be shy. Remember, that's what we're here for. I had 40 losing trades the last 2 days. What? Now I got 10 winnings on road. Nice. All right. Although, how was your risk management, my friend? Did you manage to cut your losses, stop outs? Do you trail those? How it went? How it went? Can you teach market structure while analyzing? Yeah, absolutely. Absolutely. What kind of market structure? Smart money market structure or just traditional market structure? Or a combination of both? I mean, that's going to be pretty fun. I love it. Liquidity hunt. Okay, liquidity hunt. That is a very I don't know if that will be market structure. It is just knowing where the liquidity is set at, right? For example, right here, and I always teach it this way, just so you also understand my style. I might not be that clear on that. Now I realize that you have asked that question. Let me bring out my chart because I thought I was sharing it, all right? And when we have breakouts, we usually have pullbacks, all right? So it's just like when you want to hit a target, when you throw a stone, right, to a target, you usually overshoot, because if you don't, you might not reach the target, right? You rather kind of like overshoot it, right? And if it's a paper target, sometimes it just goes through, if that makes sense, right? Just as an example. That is also called the snowball effect, right? Terrible week for me, but still got $6 to build with. Oh, really, my friend? Really sorry to hear that. If you have some examples, you want to bring them up, I'll be more than happy to give you maybe my perspective. Don't want to bang on that, my friend. It was a very good week for us, especially since yesterday. And here's the thing. We did got what was two hits. One was on XLM, and the other one was on, what was it? It was a meme coin. I don't quite remember. Late alerts or bad time frame buyings. Oh, I see. I see. Absolutely. If you have any specifics that you want me to go over, I'll be more than happy to go over those. Maybe I can also, while teaching, liquidity hunt and market structure, I can go over a couple of tips and tricks that I apply to prevent that. And first of all, it is stop losses, right? I'd rather get stopped out than anything else. Ina. Oh, sure. I mean, let me get started here. We are on Turbo because I already have found a good example, and maybe we get started with Ina. Absolutely. So also, by the way, also Van DV. Don't worry too much. XRP over a year ago. Oh, I see. Oh, too much up huge with XRP over a year ago. Oh, love it, love it. All right, perfect. All right, so here's the thing: when you have, an overshoot, which is also a snowball effect. What happens is like a domino effect, right? One kind of hits the other one, so on and so forth. What happens with people is like most of the traders, right? Beginner traders, especially, they see this, and let's go with a replay. All right, they see this and they go, "Oh, this is going to go to the moon, right? We're at the top." All right. And usually the third one is a charm. So you have the first one, second one, the third one, right? So they rush in, all right? So whoever caught it first. And since at the beginning, whoever caught it first can drive the price action because of exhaustion on the counterpart. In this case, there is no one to sell it, right? Or to buy it and then sell it. So there's exhaustion from the bears, right? And so basically the price spikes. So what's going on in here? Well then, let's see. Let's go almost candle by candle. Let's see. We see another wick in here, and you see now that we're starting to see the exhaustion being running out of exhaustion. If that makes sense. This is absorption. What is absorption? Hey, good morning, little fish. It's when there's people to buy it, right? So what happens? Either people are starting to short it, or people are starting to buy whoever is offering the sell, if that makes sense, right? They're taking profits. Whoever bought in here, right now it's selling there, if that makes sense, all right? But new members said, hey, it could go high. Look at this candle, right? And yeah, they're right. It could go high. But you don't really enter in these kind of movements. But new members or new traders doesn't really know that, right? And they think this is just, hey, it has confirmed, so it needs to go up. First lesson in market structure, right? Zoom out. Talking about zooming out, let's go and take a look at the second lesson here. In 1 second, I need to sneeze. And no, it's gone. Come on, hey, Dad. All right, which is talking about because this needs to be into parentheses, right? Or this needs to be addressed. When we're talking about SMC, can anyone tell me what does SMC stands for? Executors. Who does it? By the way, if you don't know it, just wrong answer it. Just wrong answer it. That'll be fantastic. I want to see what you guys came up with. But smart money concepts, absolutely. Fiddle Fish killing it. Yes, smart money concepts. Exactly. SMC stands for smart money concepts. What's a smart money concept? A smart ass guy, all right? Don't hold me accountable for this, but let's explain it this way. A smart ass guy, all right, go and win. Hey, you know what? I like this concept. I like this concept. I like this concept. Let's just mash it together, and I'm gonna sign it as a smart money concept. And for some reason, let's actually change the freaking name of it. Right? So, here's the thing. So that's why I hate smart money concepts. But they actually gather. It's a rematch. It's a smash up of the best concepts from support, resistance, and trend lines. That's it, right? But one of those things, it is break of structure. So what's going on? What is break of the structure? And that's one of the concepts that really pisses me off. And that's because when we talk about just structure, all right, we look for, and let's zoom in here, right? Just so I have a bigger trend while zooming in to work with. When traditionally talking, a structure is made out of a trend, all right? A trend can be calculated out of a trend line. Easy, right? Why would you change that, buddy? I don't know, but F you. So, when we have a break of a trend line, that is a break of the structure, right? Why? Because we had lower highs, right? And we have higher highs, right? So that is a constant. Why would the other way be around? Well, a break of the structure, right? So will be a lower low and a lower high. Right here we have our break of structure. We're talking about traditional break of structure, all right? That's just how it goes. Let me just Control C this. And then that guy, for some reason, decided to, all right, get one of a very good concept, which tends to be a cup and handle, right? Or what we usually see before continuation. You notice that we went up, we had a retracement to actually match up with your trend lines in here, right? And then what happens? Well, you find support and you continue. But for some reason, and I think this is what happened because I did not read about this, I just deducing this, right? He's using a smaller trend line, and what you got your break of structure here. But for some reason, instead of going down, well, then you recuperate, and then you have a, right here, break of structure. A breakout structure can get you to buy the top. Be aware of that, right? Any SNC BOS breakout settings you like to use? Oh, on the no, I don't. To be honest, I don't use it because I'm already, my eyes are already trained for this. That when I use it, one second. One second, one second. I think I'm having an issue here. Give me just one second, guys, please. Sorry for the delay. All right, sorry about that. Let's continue. Settings. The way that I use the settings, you may not. It may come to a surprise for you. I use them into ranges. Why? Because ranging it is giving me a bigger break of structure, if that makes sense. So let me see if I can have one of those. But well, you can see right here that yep, there we go, nailed it. Brother, you're so lucky. And I'm saying you're so lucky because I never use this one in here, and it guess what? It actually played out. All right, it was right there. Yeah. Look at my change of character and my break of structures. They are ginormous. All right. What happens there? It is that I use them for big continuations. All right. So let me show you my settings just in case you want to copy them. But I wouldn't really suggest you copy them. But here they are. And let me see. Should be all the way at the top, by the way. I use swing, market structures, swing 50. That's what I use. And that is to give me a huge break of structure. Why? Because when I'm looking at this, sometimes I just lose the floor. And what happens to me, it is I'm looking at let me show you. I'm looking at this, and I want to short this. All right. So let newbies like me copy. Yeah, absolutely, bro. Don't copy them, man. Don't copy because I use them in maybe in a way that it's not gonna work. It's just a 50. Just a 50. That's it. This is it. You don't need to copy anything else. It is the market structure swing 50. 50 is just the amount between candles of point of control, if that makes sense. So here's the trick. If you click internal, and in an internal you do also 50, you're gonna have the same result. Internal, look at that. Let's just wait for it to load. One second. There it is. All right, internal. Let's give it a second. Wait to load. There you go. Look at that. You have a break of structure. Your candles are different because conduct colors are different because you have a different color setup in here. All right. If you go to swing and you have 50, you're gonna have the same setup. Wait. There you go. You see, same setup, different candle colors. Why? Because this is for you to play around. All right. What is internal? What is inner structure? I'm diverging a little bit. We're not gonna get. Man, I love it, but there's so many things that I need to explain, and we're just going all over the place. Yeah, exactly. Internal, smaller. Exactly. You got it. Should the 50 be lower if trading into? No, really. That you defined it. You defined it. And man, yeah, I love this. Let me try to explain that. All right, let's do one more thing. Let's pause this. Let's reanalyze the SMC, the break of structure, because it's not only playing out in here. First, let's see how that develops, and then I talked about the configuration and how you can use it to your benefit. All right. No, that's fine. That's fine. I love it. That's what this class is for, right? It's advanced class. If you want me to talk about structure, let's dissect it fully. I just love the topic. This is what I really love about markets, right? The structure in it, and I also hate smart money concept, if that makes sense, right? So that's you poke my interest. That's it, I get very excited. All right, so the guy, the guy, right, tells you that when you break the new structure and you come back to the old structure, which was higher highs, higher lows, right? Then you break, then you have your normal traditional break of structure, and then you go lower lows, lower highs, and then for some reason he decided no. Then when you change it and you break at your previous high, that is a break of structure, right? Don't ask me why. I don't know it. And so the point is, when you see the same factor, and that's why I zoomed in here. So this is a well-known pattern on trends. I call it the U continuation pattern. I just pulled that out of my ass, all right? The U continuation pattern. I've called it that way since I use it, because when I didn't know what the name was, I just saw a U forming here. So it was coming up, U continuation. All right. And you also, what you want to go for, it is wait for the breakout of the previous high. That is usually when everything reverses. But if you have a candle close, you go for the breakout retest, then you take the next itty bitty high, take profits and trail it off, because you never know that if you're gonna be buying the top. Here is the first caveat. You could be buying the top. All right. So when you trade a break of structure, what is the break of structure? Once again, just so we're clear, just so the mumbling and all of the explanation doesn't get in the way of the knowledge. Your break of structure is when you have an uptrend or a downtrend, all right? Doesn't matter. And then you have your U forming here. So you retrace, and then you break the previous high. This right here, it is the BOS on inside. Inside smart money concepts. All right. Yes, exactly. Thank you for that, Daga. Exactly. There you go. So you got your breakout structure, which is a continuation. It shows you that you are into to create a higher high. All right. And then, but you could also get a lower low. The point, sorry, a higher high and higher low. The point of failure comes as confirmation when you have a lower low. All right. I mean, on advance, you know you're failing it because you're not reaching the previous target. What is your previous target? If you have a trend, let me show you how that trend looks like. So uptrend, 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 uptrend. There you go. For example, in here, right, you have your trend line. You are expecting, right, and then you do your channel. You are expecting, and that's why it's the next possible target. High, higher high, very close to your trend line, higher high to the trend line, higher high to the trend line. So your target, it's at the trend line, all right? 1 second, I need to mute this because it's not, I forgot that the recording also gets the ding-dings of Discord. All right, so having said that, all right, so your next possible target, it's failing to be reached, all right? There we go. So let's go back in here. So you know you have your trend line, your high, 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 and then your next high is not reaching here. That lack of strength is telling you that most likely you are not gonna get a continuation. That is the first warning. The next warning is to actually have a traditional break of structure. What is your traditional break of structure? Your traditional break of structure will be, depending on your trend line, if your trend line is this, if this is your trend line, your traditional break of structure is here, losing your trend line. If your trend line is this one, This is your traditional break of structure. All right. So that will be your break of structure. What would a change of character be? Because I already see what is the difference from what time frame would you buy on the BOS or COH or change of character? I don't care about the time frame. It is a concept. When when a doji candle is a doji candle, what time frame, right? And I'm trying to give you an example. A doji candle is always a doji candle. It doesn't matter if it's 1 hour, 2 hour, 5 hours. It doesn't matter, right? So as long as you know the concept, you just forget that the time frame exists, and you do your analysis. If that makes sense. That's not important. I tried to do the 15 minute just so I don't have to sweat at 5 minutes dump. Um, the answer, the question for me to you would be, why is that logic? I'm not 100% sure. You try to do the 15 minutes just so you don't have to sweat at the 5 minute dump. So don't try the trade the 5 minutes, if that makes sense. I don't know. I'm trying to understand. We all have a different perspective, and this is where the beauty of trading comes from, right? As long as we learn a concept, it doesn't matter your perspective. You're gonna follow the same concept, right? That's why trading concepts is much stronger than trading timeframes, if that makes sense. So let me just get back to it, right? And then I'll try to explain or address that. But here it is, an example, right, of when your break of structure talking about your SMC, smart money concepts, can get you to buy the top. When do you buy? You buy when you're above the dynamic reactor, the zero line, when you're above your dynamic reactor, when you have a green money flow, and for example, this was a setup. This looked like it did actually want to continue. But what happened? Well, it was a sellout of the market. Maybe Bitcoin dumped. Maybe somebody took some profits. Who knows? But we have a flip of the ribbon. That's why we always take profits fast on break of structure. Because for me, a break of structure talking about SMC, it is a late entry. It's kind of like, hey, this is my last chance to take the last part of the trade. All right. So let me just get rid of this. Let me see if I can Control C this just to get it cleaned. All right, perfect. I think that's about it. Let's also just manually remove this. Let's go and let's visit the actual break of structure that we were looking into, right? We have a top, and if we zoom out, that's why lesson number 1, when you're talking about market structure, it's zoom out. Because here is your trend line, and look at, and let me see if I can pull this off. Yeah, let me right click, open link, and thank you so much for that, Daga. Here is the picture that Daga showed you, right? Show everybody. Bullish string, break off structure when you're breaking your higher high. But remember, we could be having just a fake out and reversing. That's why we always want to take profits early and move our stop to entry. I'll explain that in a second. We'll see that in a minute. And a change of character is not in here, but a change of character is when you fail in doing so and then you create a lower low. All right. Where is our change of character? For example, right here in Turbo. If I turn on my indicator, you'll see, and for some reason it's not, okay, it's loading. Or wasn't it? You gotta be kidding me. Where are you? Come on. Oh, I see. I see why. I see why. Sorry, my bad. My bad. All right. So let me turn it on. Let's wait for it to load. And here it is. You have a change of character when you're losing the trend. And there is two different measurements because it is not the same. You can have, for example, right here, let's see. You have a break of structure because you're having lower lows, right, and lower highs. Just in the picture. Lower lows, lower highs, break of structure, all right? Break of structure, break of structure, break of structure, break of structure. You buy the bottom because of the break of structure, and then you have a change of character. This change of character was a fake out, but if you take a look at the bigger picture, you have right here a bigger break of structure, despite you have a smaller change of character. So, what gives, right? I mean, that depends on how big of a change of structure in change of character, break of structure in change of character you're looking into, all right? Let me just zoom in, so zoom out, and that's why you're going to be seeing that when you zoom out in here, it makes much more sense, right? Right here, when you have a change of character, bearish change of character, because we had a low, a low, lower low, high, lower high, and then change of character. But then we have a bigger change of character because at the end of it all, we did create a lower low. You see that? So at the end of it all, if I change, for example, my settings to, that's why we have internal and swing to something, I don't know, like 70 and click away, you'll see, let's give it 1 second, that we most likely going to have right here a break of structure right here. And for some reason it did not resume. But whatever, maybe if I just keep playing with it, we're going to have a break of structure, all right? So as you can see, look at that break of structure because we had a lower low, break of structure because we had a lower low and break the previous low, right? And then right here we have our change of character and we have our double top area. It also measures double top and double bottoms, right? So you are now changing and you got your break of structure, break of structure, break of structure. You see exactly the same way this plays out. But remember, let me copy these. Maybe this will make more sense when I clear this up. Let me just do, yeah, whatever. It's just that I like these colors. Let's do back on 50. Let's paste this. All right. And then right here inside each of these break of structures, your thing, it is like this. Let me see if I can actually show you. You see? So it's not flat. So let me actually manually draw it. So maybe that'll make much more sense to you. So right here, you come, you do it like that, right? And then you have maybe a week. And then you go up, you range, you go up, then you range, you break of structure, right? And then you do something like that. And then you maybe some range and then up and like that. You see, right? So right here, break of structure, break of structure, break of structure, change of character, break of structure, break of structure, change of character, break of structure, so on and so forth. You see that? So you can have inner structure, right, or swing structure. Will that clarify what do we have inner and swing? So one is for the main trend and the smallest one is for the inner trend, right? But for you, what is the inner trend? Will that make sense? Let me know. Or was that more confusing? Any questions? I need to get this out of the way to continue. So, inner, no, not really. Inner, it's both break construction and change of character. Very helpful, thank you. All right, perfect. So just to clarify, Haya Perry, in your trends, like, let me see, let's clear this up once again. If I zoom out, let's turn this off. You can clearly see that there is a downtrending here and an uptrending here, right? The uptrend, you can granular as much as you want. So for you, this is the 30 minutes, right? For you, what is a trend? So for you, is this the trend? I mean, if you trade like this, most likely that is gonna be your trend, all right? So if this is your trend, you want two things. You want your inner structure, which is break of structure, break of structure, break of structure, change of character, break of structure, double top, change of character. All right. And everything, both break of structures and also break of structure, break of structure, break of structure, all of those lines, right? Those are called inner because it is the inner structure of your main big trend, if that makes sense. Here is what I say. What time frame doesn't matter. What it matters is what for you is the trend and what is for you the inner structure. Because I can even go even farther and make the candles bigger and then get a smaller change of structure and change of character. Break of structure and change of character, if that makes sense. Right? And then your swing trade, because for you, this is a trend and this is a trend. Just as an example, I don't know if that's for you, all right? But let's just say that for you, this is the trend, all right? So you want also break of structure, right? Not break of structure. Break of structure, break of structure, and maybe change of character. And you don't have a change of character here. You will have a change of structure, and that will tell you that, well, in between your trends, there is a more higher trend. How would that be helpful? Because for once, or I mean, not for once, but you can deduct that from this high, you can go low and maybe not take profits here, but take profits just slightly below. Or look for that overshoot. All right. And then when you go high, you don't need to take some profits in here. Maybe you can consider that overshoot for your stop loss. Right? Exactly. You can deduce or deduct. Exactly. Deduce. Not sure. All right. So that's why. But for me, right, because I know how I trade, for me, this is not the trend. This for me is the trade, right? So let's go ahead and let's make that comparison once again. All right. Just imagining that you like small traders, right, and trading, and I like more swing trading. So for you, this will be break of structure, 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 change of character, and break of structure, break of structure, break of structure. All right. So let's just imagine those are, right? Break of structure, BOS, BOS, BOS. All right. And then, but for me, that is not. I mean, those lines mean nothing but noise. Because for me, this is my break of structure. This is my break of structure, my inner break of structure. Break of structure, break of structure. And then for me, this is my change of character, if that makes sense. So if that makes sense, there we go. You'll see that this is how I got it set it up. You see? That will differ here. So those two are the same. You just look for your internal to be, for me, this will be my internal. And then my external, my swing will be all of this from here to here. All right. So my external will be, I don't know, 120 or something like that. All right. I don't use internal. I usually use swing on 50, but I don't like the colors. So what I do, instead of changing the colors, I just switch the settings and that's it. So you just need to go for it, right? And analyze what is the breakup structure for you and change the internal based on your internal and change the swing based on your external or major trend. If that makes sense. Is that clear? Let me know. Please let me know. Or do we need to re-explain anything? We'll still have 15 minutes. I would like to do a prediction also, but let me know. Ah, yeah, Perry. Let me know if that works for you. All right. Let's see. Then we can move into liquidity hunt. Continue. Perfect. All right. Now that you understand what is a break of structure, talking about the BOS and the change of character, well, then this is where you can start going for your buy-ups. All right. So for me, right, as you can see, I could be buying the top with a break of structure. Let me show you an example of that break of structure actually giving me fucking here. Change of character. Come on, where is my break of structure? Here, no, oh, come on. There's no failure. There's no fake out here. All right, maybe it's just, all right, let's just imagine that this was a BOS, right? It looks like a BOS. And then I buy here and then the thing goes down. So what I need to do is turn on my support and resistances and most likely my predictive ranges, right? Let's turn on those. Like for example, let's see if I can have some support and resistance and predictive ranges. All right. So what do? I see that my break of structure is in here. I buy the break of structure. I set my stop loss. What is my stop loss? I'm in the very next support or support right down here. I give myself a wiggle room. I aim for my next predictive range. What happens? It goes up. Seems like we're going to nail that. We are at 50% of the movement. Would that be worth taking profits? For me, it would. So take your profits, move your stop to entry, and then what happens within the 30 minutes? Boom. There you go. It takes you out. But you bought the top. You see how a break of structure could get you to buy the top? All right. So I know this is a change of character by definition, but if you're looking at it, and it will happen because that is called a fake out, all right? Well, that's how you manage that fake out on the break of structure. If not, let's just go for an actual break of structure that did play it out, which is easy peasy, right? I mean, right here, this one that we were talking about in the beginning, right? So we have my first break of structure in here. What you buy? Well, you're buying the break of structure. What happened? It retraces on you. That's fine. As long as you have your trend lines, right? And then you're looking for those trend lines. And let me do those professionally. There you go. You look for this. You have your sweep of your flip of the ribbon. And then, well, then as you're coming up, you decide to enter. You buy in here. Or if you did not buy in here, you wait for the break of structure to break, right? And you do the same. Where is your support? Money flow. Give yourself a little bit of wiggle room. Where is your next resistance? Right there. And what you do, you take 50% out. And on that 50% out, you move your stop to entry. And that's it. It comes back down, takes you out. Why? Because the amount of volatility. All right. What happens then? Well, then you break back above, you re-enter because you are again on the break of structure, right? And do you rinse and repeat. You take 50% out in here, move your stop to entry. In this case, boom. Now you're going to your next target, right? Let's go to the next targets here. A couple of those. Let's just give it some time. There we go. And here is where we're flagging out. All right. When we're flagging out, yeah, look, exactly. That's turbo, bro. Love it. Hey, Rigi, how's it going? Hey, so tell me, how's it going, bro? All right. So when we're flagging out, that is our opportunity to reconsider a possible reentry. Not really on the breakout structure unless you really want to jump in for that and you're willing to accept the risk. All right. So knowing the risk of the breakout structure, that is the way to go if you want to trade that. Another thing that you asked me, it was liquidity hunt. All right. The liquidity hunt, I usually explain it like hiccups in the way up. All right. Why? Usually a hiccup or a pause in the market, it is where people create support and resistances. And when people create support and resistances, that's where they set up their either entries or stop losses. All right. Let me just get rid of this. Let's do it. Yes. Let me show you how that rolls. All right. So let's go, for example, on this one. All right. So we see this movement to the upside. We're coming up. We don't have any really hiccup. So if we don't have any really hiccup, what we go for is Fibonacci. You don't need to know Fibonacci. Just grab a box, go from the bottom to the very top and look for 2 points. 50% line and 33.33333% line. Those are statistically the areas that we bounce the most, all right? Market structure lesson 4, look for statistically where we have retracements. And you need already to have a big body candle to go and retrace from it. So most likely, in most of the cases, between, statistically speaking, from the 1 to the 3rd candle, you have the bigger retracement to the 50% retracement, all right? Once again, you have your move to the upside, your first candle low, and then 1, 2, your 3rd candle low is the lowest, right? Remember, in between the first 3 candles, you have the first candle low, all right? Or the most candle low. Yes, as we went through, yes, but we create a higher high, right? A lower high. This is ranging, all right? This is this period. We need to wait for a break of structure. Once again, you buy the break of structure, you go high, you move your stop to entry, and then as you go up, you keep trailing it to the upside until it reverses, all right? Liquidity hunt. Let's go back to liquidity hunt. Liquidity hunt, statistically speaking, is when you are bouncing back down to grab that liquidity. How, psychology speaking, how that creates, right? You don't need to know the psychology stuff. The only thing that you really need to know is that statistically speaking, your 50% retracement and your 33.333333333% retracement, it is the way, the best, the most touched. So how do you know your 33% retracement? It's easy. You just divide your box in 3, just eyeball it, then measure a line, and then you see, oh, look at that. For example, this one was very low, and in this case, was that match? No, did not match. How far low? All right, so maybe I can go like that. Let's just get rid of this. I can do, let's just for good measure, do a box. 1, 2, and maybe a little lower, right? So you just eyeball it. Just eyeball it. So there we go. I think we have nailed this. Like this, and maybe this one a little lower. There we go, 1, 2, and 3. All right. So this is your 50% retracement. This is your 33% retracement. That's it. All right. So when you measure that, you're going to be aiming for this for a retracement for the liquidity hunt on a no, I don't want to rate my experience. Logitech. All right. On your retracement. Psychology speaking, why do we get that? All right, so far, since we don't have any hiccups in here, we don't have any pauses, we don't have anything, we just have a straight only up. That's why we use straightforward our box, our 50% retracement, statistically speaking, and also our 33% retracement, statistically speaking. When you have your next retracement, when you have your next pull up, all right, now you're looking at your hiccup. You do have a hiccup. Why is that hiccup there? Or why is it liquidity hunt? first of all, let's go and do our box. Statistically speaking, the 50% retracement, it is our most important area. Guess what is on that 50% retracement? And I'm not making this up. It is your previous hiccup. How could it be? Statistics, statistics, all right? So let's just not dissect statistics because it's going to be a 3-hour class. So as you can see, the statistics are showing up, all right? Did we hit it? No. Who cares? The statistics are there. What is our next most touched area after 50% retracement? 33% retracement, all right? How do we measure our 33% retracement? We eyeball it, but let's do it like this. Let's clone this, all right? 2. Let's clone this. And 3. Maybe I got a little short of this. Let's just measure this like that. And then what I'm going to be doing, just pushing this to the half, and that's it. Did we got it? And for example, if I want just to be sure of it, let's clone this. And again, you just eyeball it. You're going to get better, right? Clone it, and you already know if you nailed it or not. And very close. I would say that that's pretty close, all right? So after that, you're looking for that 33% retracement. Did we hit our 33% retracement? Yes, we did. On the first run, no. What's your first run retracement? Right here. What is your liquidity to be trying to grab? Your 50% or your 33%? All right, there we go. So once again, you have our next leg up to the upside. Let's go for it. And you can either choose the body or the very top. It doesn't matter. And then if we choose the very top, as most popularly we do it, our 33% retracement, we absolutely hit it. And then our 50%, yes, and then we broke it. What happened on that? On that, we have a big trend shift. Trend shifting doesn't mean that we're going from top to bottom. It means that we're only in a different trend. There's 3 kinds of trends. Can you guys name it for me? The 3 different trends? It's easy. I'll draw them for you so you can name them. Up, down, and sideways. Yes. Up, down, and sideways. Exactly. So we're going from up to side. Right? So once again, in the side trend. And this is why I like to trade the bigger trend. Because even when I'm in sideways ranging, I can actually do some very nice trades in here. Right? You see that? That's why I go for the higher time frame. Because even if we're ranging, even if we're boring, right, I can still see very nice trends in here. And I can, or inner structure, right? And I can trade with that inner structure. So that's why I mean, the bigger the better for me. All right, so let's go back to the liquidity hunt psychology factor. Let's grab the same example in here. When you see this, well, it's not that you see it. Everybody else see it. And you see a low, and, well, there's many lows. That becomes a what? That becomes a support, right? And then a high. That becomes also either a support or resistance. And then you have your interest box. You're not the only one seeing this, right? If I see a support and a resistance there, where do you think I'm gonna get my long position? Somewhere in the middle, right? Either here, in the middle. Who cares? Who knows? If I'm planning to buy in here, do you think I'm gonna buy here, or do you think I'm gonna buy there? If I'm already seeing an area of interest, let me know. The answer is most likely no. We're not gonna get there. And here's where the rest of the people that doesn't know how to trade, right? There's nothing wrong with that, by the way. There's nothing wrong with not how to trade, right? But look at how interesting this is, because lack of knowledge actually changes the charts. And that is mind-blowing, man. I mean, right? And here's where people start saying, I'm late, let's buy, late, they buy, they get wrecked. That's why we see a lot of taking profits, right? And then, but people that actually bought in here, right, and they got right, hey, I can maybe re-enter one last chance, right? And people late enter here, cutting your 50% retracement. So people like you and I that know that 50% retracement is the most likely area to buy, and not only because of that, because we already have support and resistance there, right? We get caught out by new traders that they don't understand this, and that's fine. That's just the way it happens, right? And then they lack of, or they cut off that loss of volume. They do try to enter, and they pump the price like this until it will dump it on all of us. So that's why, psychologically speaking, this is where holders first look into, and then this is where late enters or late buyers enter to a final pump. That's why we look at the two possibilities. What are the two possibilities? Or the two more hit zones: 33% retracement and 50% retracements, right? Somewhat both of those are Fibonacci levels. Oh, Fibonacci, right? So hopefully that structure, we can go on and on and on about structure, right? There's many more things about structure. My perspective is just do it simple. What? Oh man, what? Man, that hand, man, it hurts. What the hell was that? Well done, parent. Yeah, I know. Shit, man. It actually hurt my hand. All right. So my advice, as a friendly advice, stay clean, stay safe, stay simple, right? Do trend lines, and when you start losing the trend line, look for that first retracement to you. Look at that previous support, previous resistance, right? 33% retracement, 50% retracement, right? And that's it. I mean, because if you actually look at, if we zoom in here, right, and we just look at this area, because you're in 30 minutes, you could be in the 5 minutes and looking at this area like a huge pump, which would be it, right? If we grab the same thing from the area that we pushed through to the very top, or somewhere around here, right? Where do you had your retracement? 50%. Even if you just measure this area, where do you have your push through? 50%. Just a little bit lower, right? But 50%. There you go. So you can granulate this as much as you can, but my suggestion will be look at something the size that it matters to you, that makes sense, right? That you can say that I can trade the trend and I can trade the inner trend, right? So you have areas to catch up with the trend if needed to. And yeah, I mean, they'll simplify your life much, much better. So like for example, the trend line, where's your breakout structure? Not for smart money concept, but traditional breakout structure right here. You have your confirmation, your entry, and off you go. All right. Right here, we're ranging. This will be a hard to understand until you are in here. But you can buy low, sell high. Buy low, you get one stopped out, but you did 2 trades, at least. All right. And then you just wait. Like, for example, if you don't see an entry, you don't need to trade it. Just let it go. Let it go. It's not worth it. I mean, yes, somebody can manipulate the charts like this and tell you, hey, look at this. You could have traded this. But in reality, it's not that big of a deal. Just wait for something that actually makes sense. So, for example, you start making your trend line. Where's your entry? Breakout structure, breakout retest, and you trade this. And then from the previous low to the next high, you trade this, right? And then, well, you lose your trend line in here. You go for breakout retest, and you get stopped out. You re-enter in previous highs, and then you do the same, all right? Early profits, move your stop to entry. You get, again, almost stopped out. You did not get stopped out, but almost to zero, and then you take your fully profits, right? So it's not as easy as it appears, but as long as you keep it simple, things are gonna be falling into place. Like, let's just wrap this up with a final setup. Somebody requested something. First request, I'll do it, and I'll do an analysis based on what we just learned. Hey Richie, hey OC, when you're trading, do you use Phoebs? I'm too lazy for Phoebs. I like them, but I do a Porchman Fibonacci. When I'm trading, instead of doing a full Phoebs, I just grab a box. My box needs to have the 50% line. And then when I do trace like this or do trace like this, I look for the retracement too. And guess what it gives me? 50% retracement. And then I just kind of like I go like this, try to get somewhat a third. And based on that third position, that is my 33% retracement, which in a Fibonacci, that doesn't really exist. But it's right where in between your 236 and your 382, which is where most of the stop losses get hit. But yeah. Let's see. What settings do you have for your oscillator? I don't change my settings, but here they are. Just as default. The only thing that I've changed, it is, what is it? Where is it? Oh, I like my bands off. But then it comes as default, and I have all shape turned on. That's it. I haven't changed any settings on my oscillator. I never do. All right, so I think that would be it for today. Let me just go at the bottom here and let's do one analysis. For example, right here, do we have a trend line? Yes, we have this trend line. Can we draw another trend line? Yes, we can. Let's do it right here. All right, so you have your breakout, retest, sweep of the lows. This will be your entry. Breakout, higher high. This will be your next entry. Breakout, your next entry. And as we already have a trend line here, all right, your next entry is going to be somewhere around here where you have some support. So, but you're topping up. So give it a second, look for that support, and let's add our alert. And let's do it also with a line so we can track it once that alert has been hit. And we're going to be looking for, not taking so far, but looking for a long continuation to the next high. So where is my next high? Dynamic reactor or quantum reactor at the top. Do we have anything else? Yeah, we do have what, an equilibrium zone, so I could be capped. And yeah, there's a lot of resistances still. We can still catch another one to create a topping pattern, like a double top, a sweep of the highs, right? And then if we break our retest, then we continue to the downside. So easy peasy. You see that? Easy peasy, lemon squeezy. All right. So I think that will be it for me today, guys. I do need to run. Hopefully you guys having a fantastic day. That was a lot of fun, by the way, guys. Keep those questions coming. It doesn't matter if they're too specific. It doesn't matter if they're too general. If they're too general, I will ask you some questions so I can understand where to get started with, right? And I love this, man. I love this. This is what I live for. Thanks, Osi. Thank you, Learfish, for being here. Thank you so much. Guys, see you guys tomorrow and have fun. Be careful in the markets.